Let's do some calls of the day. American Express, wow, Steph, downgraded to sell. That's at BTIG. Price target to $230. Fundamentals are slowing for super prime customer versus accelerating expectations in the valuation. Wow, we see greater risk of worsening rather than improvement. Unachievable expectations in 25 are baked into the share price, in our view.
So the stock's up 40% year to date. It's up 80% in the past year. This analyst had a neutral on the stock the whole time. So he goes to a sell. That's fine. Take profits. Understood. I would agree with him on valuation. I was buying this when it traded at 13 times forward. It's now at 20 times forward. But I do still think they're going to see revenue growth of 9 to 10%, maybe even more. Fee-based business growing very nicely. They're also seeing 6% build growth. So, I think the fundamentals are okay. And delinquencies, by the way, at Barclays, the conference a couple of weeks ago, every single bank talked about delinquencies being under control in that 2% level. So I don't think that there's any risk on that front. So I'm going to stick with it.
Even at 20 times.
Yeah, I'm going to stick with it because I still like the franchise, right? It's #1 franchise in the industry. Great management team, too.
All right, Uber. Josh, Wolf Research reiterates it today as its top pick, $95. I mean, you mentioned it as we were talking about the GM bull bear story. But what about this call here? Outperform, $95 price target.
Yeah, and Truist yesterday went to 100. Even like the reiterate ratings where they're not raising their rating, they're still upping the target. Uber's going to report on Halloween. I'm going to come in with my costume the next day. I'm going to be dressed like Rick Ross because I'm telling you right now, what the only bear case on this stock, people are terrified that tomorrow Elon Musk is going to launch the Uber killer. They don't understand the dynamics here. It would cost Tesla $35 billion in capex to launch a fleet of robo-taxis to compete with the system that Uber already has. The most likely scenario is 2 years from now, Elon and Dara do a deal together where Uber is aggregating demand for robo-Teslas, just like they will with the GM Cruise, just like they're already in partnership with Waymo at Alphabet. And if you think that that's the bear case, that Elon's going to knock Uber out of the box, I'll take the under on that bet all day, every day. I think this is a triple-digit stock.
All right. Qualcomm downgraded to sector weight from overweight. KeyBank. Our previous thesis was that Qualcomm would be increasingly viewed as an edge AI play, given its position in handsets and PCs. However, given these end markets have yet to materialize in any meaningful manner, we don't foresee Qualcomm benefiting from a replacement cycle fundamentally or being given a market premium as an edge AI beneficiary until that happens. In other words, what we thought was going to happen ain't happening, so we downgraded the stock.
Yeah, I think that's a very lucid argument. The only thing I would push back on is that what was just explained about the AI hand phone market not materializing yet has been known for really about 3 months. I mean, that's maybe 2.5 months. When Qualcomm last announced earnings, they kind of said, hey, everybody chill out. Man, we're not seeing the smartphone growth based on AI that you thought. Now, the question here from what the analyst says is, I don't think 15 times forward multiple for a company like this with absolutely no debt on the balance sheet, generating $11 billion a year in free cash flow, I don't think that's even close to a premium. I think you can get that easily up into the high teens, maybe even towards 20. The one thing to worry about, the analyst didn't mention this, Scott, but this is what would worry me, is that's actually, they have basically no net debt. And all that free cash flow, I just hope they don't do something stupid like buy Intel. That's what kind of scares me a little bit.
Okay.